You guys already know what it is. As always, we are back with the Hollywood trades, and we are looking just a quick. This is from my main man, EXC. Uh, you shared with me the analysis from, I forgot who it was, but it was very much on point. I mean, it's all looking very clear to see. Our weekly stochastic is at the bottom, or I should say, at a settling point. So we should be able to get some sustainable support levels. QML here is still sustaining. QML obviously here has not even been tested yet, but we do have an IFVG flip as well as an FVG, and this range should hold us up. Of course, I'm suspect of this low being taken out for liquidity with these bearish closes on the daily. These bearish closes on the daily, we definitely got to get another bullish close above one of these next few bars to enter long. Obviously, for the weekly, and of course, we love Forex weeklies, especially when we see the dealing range, because we know that these bulk orders will be in line with the weekly range. We do have a bearish weekly block now that has been mitigated already, so it shouldn't be too strong of a level, but we do need a weekly bullish close to sustain our idea of being able to attack this level here. And this move would, if you get into this move would be held for weeks. You would want to hold this until you get a bearish close. If we do get a bullish close, either above this weekly bar that's here or above the previous week's bar, we will be attacking this level, all of this LR, and coming somewhere up in here. I would say that this is a counter trend move because we did break and close below two structural lows that were holding this structure up. This low should have never been pierced and closed under. So now all of this range will remain bearish, but there is a great bullish opportunity that may present. But technically, we are bearish. Until we close above a high in this range, we will, technically will remain bearish until we get some good closings here. That's the good thing about understanding the candle closes and understanding what happens in the algorithm at that exchange point. So we are speculating, obviously, a fib retrace, and then at that point we only target, I would say on the weekly, the 50% would be the nice place to target if you just want to get a quick trade in and out, which is at the this block to me is controlling the range right now. So maybe even at this height, getting out, what is that? That's about 100 pips if you want to scale out at that height. Some of these other heights you could attack here, here, and here if you wanted to. If you were very bullish for some reasons of correction, that's the only reason you would actually be bullish here. And I do like the bullish analysis because the DXY is doing its yearly soup rejection, or I should say its purge and revert of the yearly, almost like a CRT motion. So we should be good for it. However, we really, if you're looking at the monthly and you're looking at imbalances, there's really not too much of a reason for us to think bullish, really, besides, like he said, we won't just continue to plummet down. However, this is an imbalanced wick. Let's not forget this is an imbalanced wick, and there does lie imbalances in this wick. We won't go too far into it right now because that's not the key point. The key point is understanding when we will potentially attack this level again. This low would lead us to this high range-wise if we get enough liquidity out of this range, and I'm not fully convinced because we don't have that bullish close. Once we do get that bullish close, we are going to easily come up to this level here, and this is just going to be an easy idealized target, I should say. So with that being said, that's just what we have to work with right now. And it's, we are getting a volatility here. So all of this liquidity, we should easily be able to scale this and sit on top of this. If we can sit on top of this, we could easily seek this level and potentially this level here, and then even beyond it to higher levels, all depending on. And when we're looking at Forex, we must always look at the DXY right thereafter, just to refresh anyone who may not have been looking at the DXY. We do have a crazy support zone here for the DXY. So with that being said, obvious, of course, again, obvious sell side targeting as well. If we do decide to just, use, this is a dealing range, right? From here to here. Obviously, a lot of this is fundamental. And we do have an untapped bullish level here in this bar. It's after that bar got closed over, it never tapped that or filled this gap. So this gap is what we're interested in here as far as support. We can get a crazy monthly consolidation, and that's what I'm forecasting, consolidation in the markets, and everything should find it very easy to rally currency wise against the dollar as it tests these and mitigates this block and finds its bullish close again after this, is what I'm suspecting, unless we just pull off into these FEG and then dump again into this, which I'm not exactly sure. I've been using the yearly to kind of guide like the 6 month, the yearly levels. Again, these are my bullish levels here, here, and here. These are our bullish levels. I'm actually going to clear this out here so I can see, but yeah, this is our ultimately, we closed over this bar, and this wick right here should be our retracement zone after closing over this bar. But there's no imbalance, there's no bullish imbalance here. So, and we did test a 50% consequent encroachment of the wick here. So I was just I want to see probably something similar to this on the yearlies coming up, down, up, right? The retracement range is about that. So we basically covered the whole retracement range already in this year's bar, which at this body range here, but that's basically the simplicity of it with this chart. There's going to be a long time before we see what this year gives us. And I do suspect this to be a wick and kind of a bobble, and then eventually this probably turned into an order block. If they can establish, given this, another yearly order block in the next, it takes a couple blocks to form it. So it wouldn't even be this year. This year would be a bearish year, closing and wobbling somewhere up in these levels. There's a lot of levels we're playing with up in here. So this is a consolidation range on the yearly, and on this is the 6 month, but it should not be too different either, because this is the main testing point of this chart. These two highs and this here. So this is all support for the US dollar again with that yearly order block potential, and really giving us that. I don't know if they want the US dollar to continue to go up. That is inflation, but as it stands right now, that's the liquidity that we have to deal with on that versus the Australian dollar. And so with that being the primary issue, you can see where we're going with the liquidity. I believe we still have some sell side testing to do, and we could potentially definitely get that Fibonacci rally on all the currencies. I do also, when it's hard to read currencies alone because it is such an ecosystem, and so we are at consequent encroachment of the wick for euro as well on the yearly. So we could definitely, again, I'm seeing this as a consolidation zone. It's not hard to speculate why this would be a consolidation zone. Of course, we could probably target here, here, and here. Maybe this year we could take these out and kind of get up into this OB once again. So that's just what we're looking at. In this range, we're recovering these lows. We're testing consequent encroachment here. So we might be able to get here, all depending on if the US dollar seeks that support and just kind of bobs up and down on that support. So we do got to be careful. I would say take it day by day and just use those daily ranges. I wouldn't try to swing for the fences in this range. It just right now we're not bullish. So you just attack your nearby levels and you should be safe. Adios, amigos. Make sure to share this with a friend as well.